12 holdings in my ASX portfolio in 5 videos. And today we're gonna talk about Macquarie Group and REA Group. Hi, I'm Michael and we talk about all things related to investing and personal finance. If you like what you see, don't forget to click the like button and subscribe to my channel. Yes, so over the last couple of weeks you got already a little bit of insights about my portfolio. We have talked a little bit about the other holdings I have, and today it's video 4 of my little 5 video series. And yeah, what a great day to record that video. I'm using my lunch break today and it's sunny outside here in Melbourne. Spring is finally coming. Even though we are still in lockdown, it's still nice to see that the weather can be good as well and that we are slowly getting better weather, and it's really nice to be outside today. So yeah, we talk about these 2 stocks that I mentioned, and as always at the beginning, the quick disclaimer: I do not hold a financial services license, so don't take any of the information here as personal advice. This is really just to share my personal opinion. And yeah, let's get right into the first stock and talk a little bit about Macquarie Group. So first, what is it? It's one of Australian largest banks. I think it's the 5th largest bank here in Australia. And Macquarie Group is actually focused on more on the investment section and financial services section for companies. And they are not so much focused on individual banking or personal banking as such. They manage 540 billion Australian dollars in their funds. And yeah, it's a very stable but still growing company here in Australia. So it's one of the banks that is still growing their revenues and one of the younger banks here in Australia. And looking into the charts straight away and looking into the 5-year chart, we can see that the share price has been appreciating over the last couple of years. So still a growing business, and we will see that in the financials as well. Looking into the 1-year chart, you can see that even though there's a little bit of up and down basically because of the recent downturn, we are basically exactly at the level where we were 12 months ago. Yeah, so you could say there has not been changed a lot over the last 12 months, but the recent uptrend is certainly really great to see, and obviously long term. And if you would go even further out, so a longer term, the last 10 years, it's just incredible to see what the growth rate of Macquarie was and has been. Looking a little bit in the financials and the reporting from Macquarie Group, and so it has been a very, very stable reporter with their financials over the last years in general. However, there is a bit of a down turn to see basically in all their numbers. So their net profit is down 8%, their operating income is down 3%, their earnings is down 7%, and they have cut their dividend by around 25%. So when you see those numbers that they have just released and reported, it's certainly not great to see. However, the general outlook is positive, and it's one of the banks that is in actually a very good financial health. So they are actually able to I believe will be able to recover very quickly, and I believe they will come back into better territory at some point. Their current PE sits at around 15, which is absolutely in line with the average PE for that industry. Their dividend as I mentioned already, got cut by 25%. However, it's still 3.8% on their current share price, and their payout ratio is actually not as high as with other banks. It's currently sitting at 55%. And yeah, as I said, forecast is looking quite stable, and it's actually quite a reliable business model they have. So I'm not too concerned about the future growth, especially when you see it as a long-term investment. And it's certainly a long-term investment for me. I got into the share in 2018 when the share price was at around 110 Australian dollars per share. So we have seen those levels again during the downturn, and it was even lower. However, I just continued to hold the stock, so since then I was able to participate in a price gain of just below 15%. So it's actually not too much. However, they also paid out those dividends along the way, which leaves me with a price appreciation from a little bit more than 10% per year. So that's pretty good, pretty stable, consistent, and I'm very confident with the future growth of Macquarie Group. Looking into the next stock, and there it's pretty interesting. So it's still on my list. However, I have to mention at the beginning that I'm recently sold out of REA Group. But we'll come to that later. So what is REA Group? It's a global advertising company for real estate, and their main business is here in Australia, but they have also business in Europe, in Asia, and also in the US. The main product is online advertising, but they also have some financial products in their product line. So yeah, it's a very it's still a very growing company, and we see that when we look into the share price over the last 5 years. 5 years ago we were below 50 Australian dollars, and now so over the 5 years it certainly has doubled. So current price sits at around 110 Australian dollars per share. And you can see that we are still growing, and when you see the financials of the company, super stable. The revenue has more than doubled in the last 5 years, so it's actually very, very great to see. But it also comes at a premium price, which we will see now in the financials and in the reporting season updates. So yeah, talking about the PE, it is still quite high. So it's still factored in that there will be future growth expected of that company. We are sitting at 128 PE at this moment, which is obviously quite a lot, especially when you see the uncertainty around the future house market here in Australia. I'm actually questioning that as well, and that is one of the reasons why I sold out of it. It was actually a very short-term holding for me, REA. But going into that detail later on, looking first into the current reporting numbers, sales was down 7%, and the net profit, operating profit, was down 7% as well. The revenue down 6%. So you can see that the last number certainly dropped out a little bit, but over the last years there was a constant growth in their revenues and their financial data. So over the last 5 years, you just saw that that was going up and up and up. But yeah, I feel like there's a little bit uncertainty, and therefore I basically sold out of that position. If you hold REA for longer, they do pay out a dividend. It sits at around 1%, and their dividend payout ratio is 50% of their earnings. And here, looking into my individual position, so I bought into the company in April when the price obviously was reduced, and that was obviously good timing when I got into the stock, and it has recovered from then. I got into the stock when it was sitting at around 83 Australian dollars, and it got up now It was in their high at around 117. It got down a little bit again, but I was able to sell my shares when they were at 115 Australian dollars per share, which left me with a profit before paying tax of 37%, which is pretty good considering that I was holding this stock just for 5 months. So almost a 40% return. But as I mentioned, I'm a little bit concerned around what the market, the house market will do here in Australia, and therefore I sold out of that position, took my profit, and we'll see how I can redeploy that in the future. So yeah, just recapping really quickly. Macquarie Group is a holding that I will hold on to. I see that the company is doing very well, even though there was a bit of quite a strong dip. However, I believe it's one of the best banks here in Australia, and the banks that still can provide some future growth. REA, as I said, good business, stable business, and especially here in Australia, most of the advertising goes through that platform, is the leading platform, but I still believe that the future growth and the current price is just too high for what I see can be achieved in the near future. Yeah, next week we're going to talk about my last holding, so it's going to be the last video of that 5-video series. We're going to talk about Xerox, and we talk about Webjet as well, and we talk about the one ETF that I'm still holding in my portfolio. So stay tuned for this one. And yeah, thanks for watching this video. I hope I'm gonna see you in my next video as well. Until then, bye.